Welcome to the State of Wyoming Subject Matter Minute, where we cover a wide variety of subjects related to State of Wyoming employment. This information is for you and me, the state employee. From hidden benefits to systems and processes, we'll make your job easier by giving you the lowdown, the how-to, and hopefully entertain you a bit along the way. And now, today's Subject Matter Minute. Hello and welcome to another episode of the Subject Matter Minute. I'm Matt Nagy. This is part 2 of a two-parter on our pension. If you missed it, the last episode was episode 20, and it covers, a ton of information about the pension, the first half of this two-part series. So this one's going to be a little bit long, just like last time. I apologize up front, and I'll save that little tidbit about my daughter for next time. Anyways, we're going to jump right in. So, as I said, go back, watch the first episode, episode 20 on your pension. In that we covered a bunch of details. We covered what a pension is, how much comes out of your check, when you become vested, how you accumulate service credits, when you can retire, how much you can expect to get, and what you can do if you leave employment before you retire. Okay, so in part 2, we're going to cover what happens to your pension if you die before retirement, okay, beneficiaries, applying for retirement, retirement payments, returning to work after retirement, and a few other small items of interest. Who knew there was so much involved in a pension, right? Maybe some of you guys who are getting close or are dealing with it knew, but the rest of us probably didn't. I know I certainly didn't. So, first of all, number one thing, when you first get your job with the state, make sure you go in, log into your account, and designate a beneficiary. I'm going to butt in here for the first time of many times and ask you to please go to the show notes and read a clarification I have down there about primary beneficiaries. Okay? This person will get your benefits if you die. All right. So, if you die before retirement, whether or not you're vested makes a difference in what your beneficiary will get. Okay? So, or the choices that they would have. If you're not vested at the time of your death, less than 48 months of service, then your beneficiary will get a lump sum of twice the amount in your account. Now keep in mind, we're talking about the public employee pension plan. This is a bit different in the other ones like the public safety plans, but all of this is simply for the majority of us in the public employee pension plan. If you are vested at the time of your death, your beneficiary can either take a lump sum or take a lifetime monthly benefit, basically what you would have gotten. Sorry. Okay, so a beneficiary must be at retirement age to receive the lifetime benefit. I'm going to apologize up front. I will be referencing my notes because this is a lot of information. And while I know it, it's a little bit hard to just throw out there. So forgive me for that. But as I was saying, if you are vested at the time of your death, your beneficiary can either elect a lump sum or a lifetime monthly benefit. Okay. Any beneficiary must be at retirement age to receive the lifetime benefit. A spousal beneficiary can wait before they start taking the benefits, but only till the member, you, would have been 70 and a half years old. A non-spousal beneficiary who is not of retirement age at the time of your death would only be eligible for the lump sum. Okay, there's a lot of timing things, specific timing requirements for non-spouse beneficiaries. So if that's what's going on and you need to know about that, please contact WRS. All right. Now, there are other scenarios, such as people with more than one beneficiary, or if an entity is your beneficiary, like a trust. If you need to know more about that, go ahead and contact WRS on that as well. All right. So one little interesting tidbit. You can change your beneficiary anytime pre-retirement, but your spouse has a say. Basically, your spouse's consent is required. I thought that was pretty interesting. Okay, so That's if you die before you reach retirement age. Okay. We're going to talk about what happens when you die after you reach your retirement age in just a minute. But first, let's talk about applying for retirement. Okay. First of all, you got to choose a retirement date, obviously. If you want to retire as soon as you're eligible for full benefits, you can retire early, but you will incur a penalty. Keep your birth date in mind because you need to be 60 under Tier 1 or 65 under Tier 2 or meet the rule of 85. Now, I went over that in the first half of your pension, so check out that video, episode 20, okay? All right, you apply for your benefits online, and you need to log into your account on or shortly before your last working day. Now, you can also, this is a really good time to contact Wyoming Retirement System and talk to them about it because, it's a process, and there's some things you need to fully understand, these options I'm going to talk about in a minute, because the choices you make cannot be undone, okay? So these options I'm talking about, you need to pick between 8 benefit payout options, okay? Each one is slightly different. Each one has a slightly different payout amount related to who gets what and how much. Okay, so they're all a little different. All right, so I'm going to briefly cover each. Now, if you need to know more information than I'm giving you, WRS has a fabulous video. There's a link down below. Watch it. You'll get more information on each one. Okay, so option 1, single lifetime benefit with beneficiary. Okay, so this is a lifetime benefit for you alone. When you die, your beneficiary gets a lump sum of any remaining balance in your account. Now, there's something to keep in mind here. Typically, retirees burn through the money in their account within 3 to 5 years. So really, that doesn't leave much for a beneficiary. Okay? Okay, option 2, 100% joint and survivor benefit. Now, this is the most straightforward one for members with spouses, probably the one that's used the most, okay? I'm just guessing. But it's a lifetime benefit for you, and then 100% lifetime benefit for your spouse should you die, okay? Then there's option 2P. Now, there's going to be a few or there are a couple anyways, with P. P means a pop-up provision. So what it's called is 100% joint and survivor benefit with a pop-up provision, okay? So it's the same as option 2. You have a lifetime benefit, and then your beneficiary gets 100%. But this one has a pop-up in that if your beneficiary dies before you, then you pop up to option 1. Okay, and the reason that's important is that option 1 typically pays out more per month. Okay, option 3 is 50% joint and survivor benefit. You can probably start to figure these out, right? So it's a lifetime benefit for you and a 50% lifetime benefit for your beneficiary upon your death. All right, so then we have option 3P. This is a 50% joint and survivor benefit with a pop-up. So exactly the same as the option 3, but should your beneficiary die before you, you pop up to option 1. All right. All right, so next is option 4A. This is different. This is a 10-year certain benefit. Okay, so it's a lifetime benefit for you, but if you die before 10 years of benefits, your beneficiary will only get the benefit to the end of that 10 years. Okay, so you're limiting your beneficiary to a 10-year period. All right, so then option 4B is a 20-year certain benefit. Same deal, but your beneficiary has up to 20 years if you should die to get the benefits. Okay, all right. I know I'm going fast, but this is going to be a long episode. All right, so option 5 is called a single lifetime benefit without beneficiary, and it's exactly that. It's a lifetime benefit for you, and there's no beneficiary involved. So if you're single, you know that there's no one to leave money to, you'll get the highest payout per month. All right, so we're going to complicate this further. You can also add what's called a self-funded COLA. Now, COLA stands for cost of living adjustment, right? So this allows you to have your pension payments go up every year by a certain percentage, or cost of living. You can choose between 1%, 2%, and 3%. Okay, so initially you have a lower payout per month, but then after they have a 2-year waiting period of your retirement. So after 2 years of being retired, your pension goes up every year by the percentage you choose. So I see this as something for people who think that they're going to be retired for a while, who expect to live a long time, perhaps have good longevity genes in their family, right? I think it's a good option. All right. Well, a few little tidbits. You'll get your retirement payments the month following your termination, okay? Actually, it can take up to 2 months to get your first check. But don't worry, it's on its way. You can have your money direct deposited into your bank. And something to remember is that your monthly benefit is reported to the IRS as income, so you're going to need to pay taxes if they're due, okay? All right, the next section in the handbook goes over the rehired retiree rule. Very hard to say. There are a lot of details to it, but major point is if you are truly retired and then you come back to a job that's in the same pension plan, you're going to have to choose whether or not to keep getting your pension while you're a state employee again, or stopping the pension and adding to your credits, okay? So if you keep getting your pension, you won't get any more credits. If you stop getting your pension, then you'll just add on years of service to what you had previously, okay? Now, feel free to contact WRS on this or read through the handbook for more information. Oh, and I have a little funny down below. There's a link to a video we did at HR conference this year, and Doug McGee from YDOT did a little bit on the rehired retiree. Anyways, it's hard to say because it goes on. Watch it if you want to get a good laugh about the rehired retiree. All right. So next, the handbook covers disability. Okay, so if you become incapacitated to the point where you can't perform your duties, you may be eligible for a disability retirement. Okay, so to be eligible, you must have 3 things apply. So you must be disabled and apply for disability while you're a contributing member of the WRS. Okay, and after you've had 10 or more years of service, and before the age 60 in Tier 1 or before the age 65 in Tier 2. Okay, so if you have all of those things, then you are eligible for a disability retirement. Now, there's some differences, so you're going to need to contact WRS, obviously. I need to clarify here. If you have all 3 conditions, then you're eligible to apply for disability. WRS still has to determine if you qualify for disability benefits. Okay. I feel like I'm breathing or talking really fast and maybe even breathing hard from it. I'm going to quit there. Okay. So there's some other little things. There are a few other topics of interest in the handbook that you can check out. They talk about military deployment, divorce, life insurance, dispute resolution, and more. But I think we've covered all the important aspects, the meat of the WRS system. Okay. So hopefully these 2 videos give you what you need. I still suggest you talk to WRS if you're getting close. But, this is a nice review at any point to refresh your memory about what's going on. All right, I'm going to let you go. I'm going to see you next time on the Subject Matter Minute. You have been watching the Subject Matter Minute with Matt Nagy. Please help us out by subscribing. And join us next month when we'll cover another topic of interest for all State of Wyoming employees. Again, thank you for joining us on the Subject Matter Minute.